The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start off the day looking at the German DAX and also the FTSE. And as you can see, they are in decidedly obvious trend lines to the downside. So these stocks, those two exchanges don't look very positive as opposed to what we're seeing here. Now, last night was the first time that we saw some very, very important divergence in the stock indices. The S&P could only make a 78% rally when it hit 35.16, I believe. And of course, the NASDAQ just kept going higher and higher and higher. It's since reversed. And basically, in the last 25 or 30 minutes, well, a little bit more than that, you'll see here on a shorter term time frame, I was watching it because we had just made a 61% retracement here this morning at around 8:45, right up at that 12:31. And what we've done now is we've gone down past the 1.618 expansion of that. So that's the first time that's showing some negative weakness. So that's an important thing to watch as we go through some of these things. But we do have one that is very, very important, folks, and I will bring it up here so we can take a look at it. This is the U.S. dollar index. We are within a heartbeat of these numbers we've been waiting for. This is the dollar index on a daily basis. You can see the three drive to a bottom pattern, but what I want to do is I want to blow that up so that we can see it a little better. And once you see it, you'll see that it's a very clear three drive to a bottom pattern, and we'll walk through this together here. You'll notice here that on the bottom, you'll see the blue line. That's where the 1.618 expansion comes in, and that's at 91.60. The overnight low last night was 91.74. The ABCD structure on this came in at 91.74. In other words, if you measured the ABCD, it measured to 91.74. Now, the $64 question is it going to make the 1.618 expansion or not? I don't know the answer to that, but nobody else does either. What you have to decide here is, are you going to put your position on, going long the short the euro, or are you going to wait till it hits that level? My assumption is that we should probably wait because that 1.618 is going to be very, very important, because if the market is really bearish for the U.S. dollar, and everybody's been bearish for a long time, that's going to tell us that this thing's getting ready to really go south in a big way, and I don't think it's going to do that. And let me explain to you why by just looking at the charts, not looking at anything that people are trying to tell us or anything. But if you take a look at the weekly chart here, just get this up here and you'll be able to see it. You'll see the weekly chart. The 91.63 is the 78% retracement. We've been to 91.74 so far. So I really believe, and look how many weeks we've been down, folks. This thing's been down, 5 weeks in the last run and 8 weeks in the run before that. So it's only had one up week in the last 13. So it's extremely overbought. Whoops, oversold. So 91.63. And not only that, but you've got that 78% level staring you right in the face. And look what happened when you got to the 61% retracement way back in March. You rallied from 94.50 all the way up to 103.50, just straight up. So this market is very, very oversold and is ripe for a turn. So you want to be watching it if we get to 91.61. That equates to just about 1.2015 in the euro. And we've sent out a video on that last night. the night before, and also last night too. I did both nights because it's so important at those numbers. At least from my perspective as a technician, maybe they don't mean anything or not. I don't know. We did have a question about a potential flash crash coming. Folks, don't. This is really important. The number of times we've had a crash. Folks, if you start waiting for that and start looking for it, you're going to drive yourself skoshi bakatati. And that in Vietnamese means you're going to go crazy. So you don't want to mess with that. Just trade what you see, not what you think. If you start thinking too much about it, you're going to get more trouble than you want to, because it's not that hard. Like Mark Douglas says, trading is simple, but it's not easy. But once you start thinking about this and thinking about that, and what if this happens, and what if that happens, that's the one part about the news that makes it very, very difficult. With it, if you're a real technician, you're just going to look to see how the market reacts to some of these things. We'll talk about that when we start talking about the corn market that we had yesterday. We had another question about the corn market. We should do that right now because it fits in with what we're chatting about. If you'll remember, yesterday in the corn, we were saying that corn was going to open. Let's get this up here. We have a caller in. Mr. Z, are you on the line here?
Mr. Pesavento, I am on the line, sir. Thank you for taking the call.
You may call me Your Excellency.
Your Royal Highness.
Larry's just as good. What can I do for you, my friend?
I wanted to ask you a question about the dollar index, but would you just finish your thought on corn? Let us all listen, and then when you're finished, I'll ask you about the dollar index, please.
Sure. I posted a chart of the dollar index, and I mentioned we're going to be going above the July highs on the open, and it was going to be up about 5 to 7 cents. And because we were completing that ABCD there, I said that's probably the place to take a profit, because you're going to be getting a lot of stops hit unless the market really runs away. It was most probably getting ready to sell off, and of course we sold off about 10 cents, which isn't very much. But now we know that if we get above that 365 again, that it's a for a real move, and you can go back long again. But right now I think we're in the midst of a correction that should be somewhere between 15 and 20 cents. So that's what I'm looking at in the corn. Same thing with the beans. The beans look, they hit 965, and they sold off more than 20 cents to close lower on the day. So that's my feeling. Is just I'm using common sense, because if the news is really bullish like it was, why didn't they go limit up, or at least go crazy to the upside for a little bit? And that wasn't crazy to the upside. That was just going to get stops, in my opinion. So anyway, go ahead with the dollar index, Z.
Yes, very good. Let me just add something onto your corn commentary, which we all appreciate, just looking at the patterns and the prices. I'm working with several people who've shared with me the fact that this year, 2020, may in fact be an analog of 2003. And by analog, I am describing two markets separated by 17 years in time that might be quite similar. And 2003 started off as a good growing weather year in the U.S., and then turned dry in late July into August. And
hey, Z, we got to pay a few bills. Can you stay with us, please?
I sure will. Thank you.
Hey, we'll be right back, folks. Mr. Z is with us, 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we're talking with Mr. Z out of Philly. And Mr. Z, what are you looking at today, my friend?
Larry, let me just finish off that thought I was speaking of in corn, which merely complements the trading observations you made in the Dees contract. 2003 and 2020 thus far are similar years for corn, the corn crop that is, meaning planting and early growing conditions were both favorable. And in both years, the summer turned dry in the second half of July into August. And in the case of 2003, the corn market worked irregularly higher into year end, driven by the market realizing over time with the October-November USDA reports that the crop was smaller than guessed because of the dry August weather. And that is what we have going on here with the rally since, August 10th in corn. And as a fellow in the Tiger's Den just posted in 2003, the market topped right about this time frame, pulled back into October, and then rallied into the end of the year. So I just share that as something to think about as we go through the next several months in the corn market, merely complementing just what you said about the completed rally potential yesterday. So that's my input for corn. And I wanted to, my call into you this morning, Larry, was to ask if you would share with us on that dollar index, if the pattern does not resolve with that, at least at this point, that potentially classic textbook three drive to a bottom pattern, if that's not what we're dealing with, once we get a week past this time, and it's a breakdown, decline acceleration phase, can you pull up that weekly chart and share with us what the downside targets would be if it's not a bottoming pattern here?
Oh, sure. I'd be happy to, Z. The main thing you'd want to realize that once you break through that, you're going to see all kinds of, I'll put this in again so everybody can see it, that 91.63, the next you'd be looking at would be the double bottom at 88.50. And then below that, there's blue sky all the way down to 84. And 84 is nothing more than a 78% retracement of the low in 2014. So this is really important low here in the dollar. I mean, like super important. You can't make this up. So that's the main thing, and you got to keep an eye on it. So we got to watch it closely. The euro has just popped up here now. We've got out very close to one of our numbers here in the euro, which is 120.20. The dollar index hasn't started making new lows yet, but the euro has. So this is going to be an interesting day here, by any stretch of the imagination. So the first level is 120.10 to 120.20. We're at 120.07 right now, but the U.S. dollar index has not made a new low yet. Our low is still 91.74. So watch the euro. If we get below that 119.85, I'd say I'd take a short gander at it from the short side, because then your risk will only be about 25 pips. But this is a really important technical picture, John, because there's so many numbers there and they fit so nicely between it. And the one thing I'll do is after we're finished here, I wanted to go and blow up the chart of the dollar index one more time to show the folks how important that is and how sensitive it is to these prices, and we're just starting to see them now. So we might have made a higher high here in the euro, but not make a lower low in the dollar index, and so that's going to be some market feedback that we can use also. Does that make sense?
Thank you so much for bisecting this market here and the very short-term clues we'll be looking for. So thanks again. I'll be hanging up and ask if you could, in the next 30 minutes, post the sister chart to this dollar index, and that would be your euro versus a dollar currency pair. I'd appreciate that, sir.
Well, John, I'll tell you, I can't make any promises, but if time permits and I'm in a good mood, possibly I could do that. Why don't we do that right now so that everybody can see it, and you can stop yelling at me, okay? Hold on. Hey, listen, be safe over there, my friends, and I'll talk about this after you hang up so you can see what we're looking at here in the daily euro as we're speaking here. So have a good day and be safe.
Thanks so much. Bye now.
Okay. All right. Now, folks, we're talking to Mr. Z about the euro. As you can see here now, the euro has popped up above the highs of July the 27th, also the highs of early August and also August 17th. We've reached the magical level that we were looking at, which was at 120.10. And so it's very important that we pay close attention. We're trading at about 15 pips below that right now. So that's the first sign that maybe something is happening here with this U.S. dollar. And this is where you want to get short the euro. The U.S. dollar has not made new lows yet, folks. So, but that index is really hard to trade. It's more of an index for observation because hardly anybody trades it. Everybody trades the cross rates against it. So we're at a real critical level here in the euro, but this is a very low risk trade here because the target was at 120.10 and we hit 120.15 and we're a little bit below that right now. So your risk here would be really small here in the euro if you're looking at something that's interesting, because all of these are very, very important. And I'll bring up that three drive pattern one more time in the dollar index because it's so important. I blew this up to give a description of it because this is what you want to be watching on. And that's what we're paying attention to. Now, there must be some problems with data over at the New York Stock Exchange, because someone just told me that Tesla is actually down on the day. Are you kidding me? Shut the front door and raise the rent. By the way, folks, if you're wondering why a stock like Tesla, trading at $2,500 a share, can do that 500% in 5 months. The reason why, folks, it is not an automobile company. It is a data collection and distribution company is what it is. So if you want to have more information on that, the newsletter this week really describes what was happening to all of these stocks: Amazon, Google, Microsoft, Netflix, Facebook. All of them are in the same business, in data collection and data distribution and selling. And that's what it's all about. It has nothing to do with what you think these things are, like selling cars or, Google search engines or, Amazon books. I mean, I don't think Amazon sells books anymore. Well, I know they do, but, nothing like what we have. So that's what we're watching. By the way, Mr. I don't know what Quanon is, Pete. That's over my pay grade, Bubba. I'm sorry, I don't understand what that is. But Mr. Musk now is the third richest man in the world. Wouldn't trade places with him no matter what. QAnon. I don't know what QAnon knows. Mr. Z knows. Mr. Z knows it all. We'll be right back. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'm going to comment just a little bit about the fact that D.E. Shaw, the hedge fund, is buying into Eastman Kodak, folks. D.E. Shaw is not a hedge fund, folks. I mean, no, that's what they do, but that's a brain trust. That's just like Jim Simmons. Those are two premier people that work with computers and the brain drains from MIT. Those are the super smart people, folks. So when you see a guy like D.E. Shaw, buying into Eastman Kodak, he has a really strong feeling on it mathematically. I mean, not just they don't look at fundamentals. They look at mathematics. So that's a big deal, from my opinion. Same thing with Jim Simmons. Just to give you an idea, way back in 1985, there was a young man working for D.E. Shaw with his wife, and they were doing actually quite well after they got out of MIT. But they decided they wanted to go out on their own and start a bookstore, online bookstore. And it was none other than Jeff Bezos and his wife. And the rest is history. So just remember, when D.E. Shaw's in there, pay close attention, because they're smart people, and that's you want to follow, sort of what they're doing. Okay, a couple questions on a joking note, I guess. Someone asked me what was the most money I've ever spent on a dinner, and I have to think it was 2003. It was in New York at one of the money shows. It was sort of like a family reunion. Byron was there with his wife. They were living in New York at the time. Mark and Paula Douglas were there from Chicago because he was speaking. My sister came in with her husband, and there were 3 or 4 other people that were there that had their families there, a couple of bond traders that were almost like family. Rich Anderson was there. Ended up being about 32 people, and we went to Patsy's restaurant there on West 56th Street. East 56th Street, right around the corner from Trump Tower. And we were eating early, of course, because we wanted to beat the crowd. And since there were so many of us, they gave us the private room upstairs. And so I think there were about 30 of us there. And we had a wonderful dinner for about 4 hours. And my good friend Byron Tucker came with his wife Liz and a couple other friends. And of course, Byron has to, let everybody know what a wine connoisseur he was. So he ordered 3 bottles of port wine, which I don't like port wine, but everybody else did. So that was $400 a bottle. And anyway, it came to about $5,000, but it was worth every penny of it. And the reason why is we happen to know the people that own the place, and the maitre d' was actually a very, very dear friend of one of our guests that was there. So we were treated like family, which was really super nice. In fact, we didn't even order anything. They just started bringing the food. But they gave us autographed copies of the cookbooks and all of those things. But at about halfway through, a uninvited guest came upstairs to wish happy birthday to 2 of the ladies that were having birthdays. And it was none other than Tony Bennett. And boy, if that wasn't a big surprise, it was really cool. And that was a fun part of it. Anyway, that's neither here nor there. The other one was with Bryce Gilmore in Chicago. We had done a live seminar for 3 days, Wednesday, Thursday, Friday. And then Friday night, we went to dinner at Gina Giorgetti's there in Chicago, and we had about 40 people there, and that one run pretty close to $6,000. But Bryce Gilmore picked that whole thing up because he had made so much money trading those 3 days. He was feeling very gregarious, and so he, not gregarious, but very what's that? He was feeling like he wanted to spend some money, whatever that big word is. Anyway, so he bought knives for everybody. These steak knives that they have. And sets of 4, those were $100 a piece. So anyway, that's neither here nor there. That's back in the old days when I was young and foolish. Now, I mentioned the folks that, we saw the first signs last night that there was a possibility of a correction coming in here. I don't know if this is a top or not, but it's a possible correction. And the reason why is that the NASDAQ made new highs, substantially new highs. We shattered the 1.618 that I talked about here yesterday. We just blew through that like it didn't exist. But none of that happened in the S&P. It didn't even break the 1.618 expansion that we had at 35.24. Now, you could only get up to the 78% level, and the rest of them started to roll over. And then this morning, as I posted, we had a little bit of a rally in the NASDAQ right before the open. We got up to 12,200, and we've now dropped 70 handles from there just very, very quickly. So those are just a few of the things that are giving us a pretty good idea. Now the euro's down to 1984 right now, so that might be it in the euro, folks. It's still a little early to tell, but at least it's getting close. So we'll see how things move along. I wanted to spend just a moment here in the gold market because we're at a very critical level here in the gold. Last night, I'll bring it up here so you can see it. We made the perfect 78% level at the 2001. That was an exact 786 retracement. We hit it again this morning, just a little bit ago, at 2080. We didn't get to 2,150, but that was a high overnight. We're now trading about $10 lower than that. So that's a very, very important spot to pay attention to because it is an ABCD pattern right at a 78% level. But any movement at all above this 2005 level sends it up another $50 really quickly with that ABCD pattern that we have setting in there right now. So this is a really important day here. In just about everything. We've already talked about the euro, we talked about the S&P, and we also talked about the dollar index, and what was the other one? The NASDAQ. So there's a lot of things happening here that'll tell us what we're looking at. The fact that someone this morning talked to us about the fact that we had a hold on. Yes, Mr. Z, Bezos was at D.E. Shaw. In fact, they're all friends. I mean, Jim Simmons and all those guys, they know each other, and that's a really a big brain. But his wife, Bezos's wife, Mackenzie, was also working there. And if you read the book that they had about Jim Simmons, you'll read about some of that, some of those people, how they cross paths. But those really bright guys, they're in a stratosphere of brains, and that's a way above this old cowboy's pay grade. Anyway, let's keep our eye on the ball here this morning because we got a lot of things going about what's happening here today. So, wow, we got another break coming up. Remember, folks, we will have Arch Crawford on Thursday, and we are going to have Bill Meridian as our guest. Bill will be our guest from Cycles Research on Friday. And I am going to give everybody the day off on Monday the 7th. Just because you worked so hard this year, we're going to call it Labor Day, and everybody gets the day off. Not that it's going to be any different than any other day, but we'll see what's going on here, and we'll have some fun looking at these things. If you have any questions, folks, it's 877-927-6648.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, one of the nicest people in the stock business is Art Cashin, member of the New York Stock Exchange, the oldest living member nowadays. Art and I are the same age, but he's had some information that I posted into the Tiger Den about what it means when a stock splits and short covering and stuff like that. It's really, I think it's very valuable. So I put it in there so that you folks could take a look at it, because it gives you an idea that when the stock split, there's really nothing different. It's you have a $5 bill. Instead of having a $5 bill, you got 5 ones. So that's pretty much what what we're looking at when you're looking at that. Very, very important. There's another one. He's slowed down quite a bit because he had a stroke, and he's actually doing much better now. Another one that I want to bring into the room here is to get this up here, so we'll see it here. This is from Peter Brandt, and it's about the gold market. Why he likes gold market so much. There were 3 reasons why he likes trading the gold. First of all, it's easy to chart for sure. For really, the first is gold is the purest of all the stock market, all the markets to trade. This is probably because there are no real fundamentals in gold like in other metals, other markets, because nearly every ounce of gold ever mined still exists, and gold is worth what the composite of all market participants think it's worth at any given time. Number 2, gold is the truest charting market that exists. I have to agree with that 100%. The gold market really charts well. That's why I look at it every day. I mean, it's really pretty cool. That's basically it. And the third one is gold does not make large moves without first ringing a bell. And so we've been ringing that bell for quite a while here, because this market still wants to go higher. And we're hoping, and I know that's a terrible word to use for investment purposes, but if we remember what we were talking about a couple of weeks ago, that is, if we get a sell-off here, something to the name of about $200 or $300 a share here over the next 4 or 5 weeks, that would really be an ideal buying time for the gold market, in my opinion. Yes, there is a The full moon comes in tomorrow. Actually, the full moon is on Wednesday. I'm showing here on my calendar, Marshall. I might double check that, but this is not an astrological calendar that I'm using, so it could either be Tuesday or Wednesday. So either one of those would be pretty good. So anyway, I would highly recommend reading that Art Cashin piece, because it tells you, if you don't understand stock splits and short covering and stuff, that's a good idea, to look at it. But remember from the book of Trade Reminiscences of a Stock Operator, when Daniel Drew had Andrew Carnegie by the short hairs short some stocks, and he said, "I'm going to get out of this." And he said, and Daniel Drew said to him, he said, "He that sells what isn't his'n must buy it back or go to prison." Because back in those days, if you didn't cover your short position, they did put you in prison, because it was a pretty serious deal. Now now they probably give them gives them jobs in Washington, would be my guess. So we'll see how this is going on. Several people have asked me, where is the top in these FANG stocks and stuff? Folks, I have no idea, and I don't think it makes any difference. They're going to trade at levels where they're supposed to be trading. I'm not involved in those at all, but if you're going to pick a top, that's okay. But you've got to use some common sense and put a stop in, because look what these things have done. I mean, they've done things that I've never seen, and I thought I'd seen everything. So we've seen a 500% move in Tesla. And, people think that it was an automobile company. I heard the people on Bloomberg saying, how can it have a 1175 PE ratio? Well, it's not an automobile company, folks. It's a data company, and it's a satellite company. Elon Musk has the rights to put up 30,000 satellites up there, and they can put it up with drones, they're really low flying, but, they can dot the skies. You won't be able to see the stars at night. They got so much stuff up there. So how that stuff is going to be used, I don't know, but this is what blockchains are all about. And that's why the people that follow blockchains and cryptocurrencies are watching things like this, because if the government gets too far out to the left, the blockchains can come in and make the playing field level, because that's open source. Everybody has a source to that. Now, some of you don't know how to use it, but you do have coins available that'll help you use it. But that's neither here nor there. We'll move that on a little bit later. One person asked a question here about the cattle market. We had a very nice sell signal in the cattle here just last week. If you'll notice here, we posted this last week that we had a beautiful retracement level up there. You'll see it was spot on, almost exactly at the 78% level, a beautiful 3-drive to a top pattern. And we broke from 111 down to 105. It's about 6 points, but we're coming in to some pretty good support here at 102. Remember, we had Rich Anderson on yesterday, and Rich was telling us, the price of, beef is most probably going to get a lot higher as we come into the holiday season of November, December, just because of the fact that they can't keep these factories moving as much because they don't have the employees. So it's going to be hard to get them. They have the meat, but how are they going to get it to the market? That's going to be the case, and they're going to get it to the market at a higher price, would most probably be my guess as we watch these things. If you have any questions, folks, it's 877-927-6648. The lines are all lit up right now. The board is full. You won't be able to get through for the next 30 seconds or so, but if the lines open up, you will be able to sneak through. Al has promised me that you'll get your questions relined as good as we can. Now, one of the markets that of all the FANG stocks that are out there, there is one that looks a little weaker than all the others. And I'm saying this with tongue in cheek because that is the chart of Netflix. You'll see we made it up to the 78% level at that 550 level. As long as we don't get any higher than 550 in the Netflix, and it hasn't gone 500%. It's only gone, how much did it go up? About 100% probably? Yeah, pretty much. But that's the only one of that group that looks like it's in a bear market. All the rest of these have gone into new high ground, And so, it's busted all those patterns that were there, but that's not unusual when you got stocks like Tesla and Apple that are split that are pulling the rest of the market up. And when they go, all of them run together. So that's the main thing. Now, here's a interesting pattern here. Because we're up about $18 in the gold, this might fail, but we have this is a gold market index. This is a gold miners index. I'm sorry. You'll see the 135 pattern that we have here. As long as we don't get above 43.80, and I don't know if we did that already this morning, but as long as we don't get above 43.80, that's a 135 sell signal to the downside. Now, if one of you really smart people in there will give me the last price of GDX, we'll see if it's above 43.80, because you wouldn't have sold it on that gap up, because that would telling you that it's not going to do it. So if you'd be so kind as to give me the last price of GDX, I would certainly appreciate it. We'll see whether that pattern is still going on. It's at 43.32, so it's still okay as long as it doesn't get above 42.37 or 43.32, which is
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, the euro's now popped off 30 points from the high, so that's actually 40 points from the high, so that's probably telling us that that is the bottom in the dollar index and the top in the euro. That's my 2 cents worth from the cheap seats here in Tucson, Arizona. So let's not forget that. That could be a really big one. Also, folks, we're having some pretty wild volatility here in the NASDAQ, as we should, because we got all the way down to 2130. We've already rallied 90 points back all the way up to 2010. So this market is not for the faint of heart, boys and girls. So keep that in mind when you're trading the NASDAQ. It's the pork bellies, of the 20th century. So don't, or 21st century. So, unless you're really well heeled, you don't want to do that. So we've now backed off about $13 from our high on the 78% level in the gold at 2,000. We got down to 1986, and as long as we don't get above that 2002 level, we have a negative bias on the gold market, which it'll give us a chance to buy it at a lower price if, in fact, the market keeps doing what it's doing here this morning. But it's still a little bit early for that. I'm going to try to have Stan Harley as our guest tomorrow. He's a little harder to get through to these days because he's working with a hedge fund now, and so he keeps really busy. But we're going to try to get him on. Remember, we'll have Bill Meridian on Friday as our guest. Arch Crawford's going to be on Thursday, and Monday we're going to have a very special guest. We're going to take the day off. That's going to be Labor Day, so we'll have a lot of fun with that. Okay, folks, I think we've got, no more calls coming in, and we're coming to the end of the show here. So remember, folks, always use your stops, because if you don't, you're telling the market that you know what more than the market does, and that's a sure sign that the market's coming there with you, with that man with the cloak and the sickle right behind you, taking these big swipes, and it will take care of you really quickly. So make sure you protect yourself at all times in these markets, because they are not for the faint of heart, and the slightest news item can send them spiraling in either direction. So live every day in an attitude of gratitude, and may God bless.